Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We are going to have a special guest today, folks. John Jameson from the Isle of Man. Been a good friend of mine for over 15 years. He was a student, but I learned more from him than I ever taught him. Probably one of the smartest guys I have ever met. I've been trying to solve a puzzle for well over 10 years. John came here and spent a week with me many years ago. He solved it in 1 hour, and I had some of the smartest guys I know look at it that couldn't quite figure it out, and he figured it out very, very quickly. And not only that, but he's a nice guy, and he does a lot of his income comes from, they have sports betting, of course, and he looks for unusual opportunities like Brexit, big elections that are coming up and stuff like that, and he has a very high percentage of being right. So maybe you want to ask some questions. He's going to show you some of the esoteric charts that he uses, talk a little bit about options, but we'll have John Jameson on at the break. We posted the chart, of course. The first chart I put in there, the picture, that's Hainan Island, folks, in China, the South China, and it is on a holiday. I have actually been there midweek. It's about about two-thirds of that, especially during the summer months, but it is absolutely crowded. It is, you just have no idea how crowded it is. Anyway, let's take a quick look here at one market that really, I mean, this is like four reallys and a wow, and that is something we don't trade too often. Oh, dear, where is it? I can't find it. Here it is. Hold on a second here. I got it right here. 1 second. We'll get this up here, and we'll take a quick look at it. This is the... You got it, Doc. You got the right color. That's why these rafts, all those rafts there in China have to be in yellow color, I believe. I don't know why, but my guess is for safety. Anyway, let's take a look here at the moo cows. This is October cattle. Folks, for three weeks, we've been testing the 78% level and the 61% level, 61.8% level. This is really ripe for a rally. It's the first ABCD pattern that we've had in 1 year, which makes that bullish. Remember what Gartley said in his book, buy the first ABCD pattern in bull markets and sell the first ABCD patterns in bear markets. But this is a really interesting one in cattle. Now, I went and I looked at COW, which is the ETF for the livestock market, and it has jumped. It jumped about 7% yesterday, and that was with cattle being down. However, the hog market that we've been relatively friendly to was up about 2.5 cents yesterday, so that could have been the reason why the ETF jumped. But anyway, keep an eye on these cattle, folks, because they have a very interesting pattern. It's just got a lot of things that you like to see when you're doing technical analysis. It really lines up, really quite nicely. So just remember that's an important one to watch from my perspective. And they fail a lot, so anything below 102.50, 2 cents down from where we are now, would certainly be a failure. Regarding the December corn here, we looked at that last week. Yes, I know, Bob. You're right. It does have hogs in it. I don't know the weighting. I don't like ETFs for so many reasons we can't go on to here. The main one is I don't understand them. But, Bob, I'm not sure of the relationship between the cows and hogs. Now, the live cattle should be a heavier weighting in the ETF than the hogs, but they don't always do it the right way. So I'd have to check that out. But I'm not trading the ETF. I'm just showing you what happened in the ETF. And I posted the chart of the hogs, of the cattle, but I have not posted the chart of the cow, and that's the reason why is for some reason I couldn't get the data to be refreshed, so I wasn't able to do that. Now let's take a quick look here at corn, which is another way of looking at hogs, because hogs eat the corn. You notice we had that 1.618 level. We had a really strong rally. and this is the biggest move we've had since, way back in June, and that certainly, a lot of it, that is short covering rally. So you want to pay particular attention here, because if the corn goes down and makes new low now, boy, you'd be looking at, corn somewhere around the 320 level would be my guess. But this is going to be very interesting when we come up to this one as we watch it. Now, we have another one that we've been watching. Oh, I have to do the DAX daily because I think that's a really important one to watch. We'll put this up here so we can see it. This shows you this rallies that we're having. They're really in a very minor area coming back from July the 8th. Let's try that again, August the 8th, and we will see if that's going to be the case, but it's in a very, very tight trading range here on the daily DAX, from a much lower level. So that's one thing that we need to keep in mind. The other thing to keep in mind is they're talking about these North Korea, how they want to hit our power grids and stuff like that. Folks, during the Cold War, when we were against Khrushchev and Reagan and all the rhetoric that was going back and forth in the Cuban Missile Crisis, later, many years later, we found out that the Russians had nuclear capabilities, but their guiding systems, they weren't even able to hit Texas, let alone hit a power grid. So just because people are telling you that they're able to do something doesn't necessarily mean that they are. There was an interesting movie with Sean Connery and Michelle Pfeiffer many years ago called The Russia House that showed how that system went, the fact that they were unable, to really do anything militarily because they couldn't get the weapons to go in the right direction, which nowadays with all the technical stuff, that's probably all out the window, but that's just a little bit of history that we have going on. We have to take particular attention here, folks, to the British pound today. I want to bring this to your attention, to all of our friends in the UK. If you'll notice here in the British pound, we're getting up to this 103.30 level. That's very, very close to a big 61% retracement. We're trading at 103.50 right now, so we're only 30 pips away from that level. And so what we're going to be watching is the fact that we get this move up to the 130.80 level. That would be a very interesting Gartley pattern, because here again you're looking at an ABCD structure in a down market, and that usually means you're getting ready for some type of correction. That's what it seems. Regarding the stock market, well, we're going to take a break here in a second, but regarding the stock market, folks, they are not afraid of anything over there. I mean, it doesn't make any difference whether it's nuclear holocaust, whether it's the biggest hurricane they've seen in the Gulf ever. That's even bigger than Katrina, this Irma. 185 miles an hour winds. I mean, my goodness, that's a lot of wind. That's more wind than I have. And I don't know if you guys know this or not, but the derivation of the name Pesavento means big wind. I don't know how I ever got that name. Okay, all right, let's move on here to what we're going to be looking at here in the Treasury bond market. Yes, it is climbing a wall of worry. You're not kidding, and it's covered with all kinds of slippery stuff like petroleum jelly, and that's still going higher. So we'll see. When we come back, we're going to talk about the bonds. The bonds are looking real interesting here.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to switch gears here a little bit and go over to the interest rate market. First, we're going to look at the Treasury notes on a long-term basis. We'll put this up. Now, remember, this is the largest of the interest rate vehicles for trading. It's 6 times larger than the Treasury bonds. This is the one that makes it for our interest rates for cars and mortgages and stuff like that. But what we have here is, you'll notice that triangle that's in there, that pennant, that happens to be a 20-man line where it touches the old highs. That was right at 0.44, just a little above the 382 level. We're a little, heading down a little bit from that level. But this is a very, very important chart. But the notes are like trading peanut butter. They get a little sticky and they're really slow. Whereas the bonds, they move very, very quickly. So that's the main thing. The question that someone's asked me is on that chart that we had about the S&P that we put up there. The only pattern that I'm seeing is we had an ABCD structure to the downside, folks, and then all we did since that time was to have a rally back, and the resistance coming in on this comes in at the 2472 level, as I recall. So that's that's mainly the reason of that's it. Also, there is a possibility, yes, that the bonds have had a flight to quality or a safe haven run because of the thing in Korea. But folks, if that were the case, there would be a safe haven run in the dollar, and that has not happened. The dollar's been in the sewer, so that argument to me does not hold water. But let's just look at the patterns here. Let's start out with the daily chart here. I'm going to do September bonds because that's not the lead option anymore. They're trading December, but they still plot September bonds, and I wanted to bring these up to you because if you remember this level that we were looking at 158 and change, 158.22 was the X number we wanted to see. We've actually hit that. And give me 1 second to post this into the room here, and you'll be able to see it. There's the 3-drive pattern on the daily. What's interesting about this is the first drive led to the second drive, which is in the middle right there. That was a 1.618 expansion of drive number 1. And the third drive is the one we've just completed this morning, is exactly 1.27, and the time between the highs is absolutely spot on. So this is a very interesting pattern to keep an eye on. Remember, this is a rally in a bear market. I just showed you the Treasury notes. The Treasury bond weekly chart looks exactly the same. And if we go to the weekly chart and just blow it up over the past year, not going back to the high that it made, several years ago, we're going to see a bond chart that has some very interesting patterns in it also. You'll notice that in 2017, up to June, we had a really nice three-drive pattern. The market broke, 7 handles down to the 151 level, and now it's completed that ABCD, and that also leads us to that three-drive pattern that we just saw in the daily. So this is a very interesting scenario when all of these are coming together. So whether that's going to be an interesting phenomenon with this or not, we'll just have to wait and see if that's going to be the case. The gold and the silver. Folks, the gold and the silver, they look very, very strong. There's no ifs, ands, or buts. In order to see it, just take a look here at the dollar index and how it relates to the gold and silver. We'll put it up with gold first. You'll notice here that the gold is having a big move. That ABC structure in the gold, the D level, of course, takes us to 1385. We're trading at 1345 right now. So we could be there by the time this show is over or even before the next segment is over. But that's what it's looking like. You'll notice that the XAU is making a 78% retracement of the high that it made in January. So it's lagging badly, but it's still going up. So this market is telling you you've seen no indication that the gold and silver, want to back off as yet. And I don't think that it's going to back off yet or not. We'll have to wait and see. Now, this is the chart that we were looking at in silver over the weekend, and I wanted to bring it up to show you where we are. You'll see here. By the way, silver did leave a gap Sunday night, folks. In December, silver left a gap at the low of Sunday night was 1783, and the high of Friday was 1782. So it left a penny gap, which in itself is very, very unusual. And it's continued to go higher. And, it's been, a very, very strong market. And let's get the update on that so we can take a quick look at it. That's right here. You'll see here's where we are. You'll be able to see this little gap that we have in silver. And even though it's quite small, I think it's very important because that gap will be filled eventually. The $64 question is when. But you'll notice there's several ABCD structures in here near this 78% level. So we'll just have to, wait and see what really happens. I don't see anything to do here in the gold and silver. If you had to put me down on a chair and put a hatchet between my fingers and say which one you want to lose, I would say I would take a really close look at the short Treasury bonds and a really close look at the old October cattle. Those are the two that look really interesting to me. Now, I don't trade cattle very often. That's the understatement of the year, maybe 3 times a year. This would be one of those times that I would be looking to do it. So it's going to be interesting today to see how it all unfolds, because it will be interesting, to say the least. We're going to have a real special guest, as I mentioned before. John Jameson from the Isle of Man is going to be on. He's very, very entertaining, and he knows a lot of stuff, folks. Anyway, we'll have him on at the break, and he'll talk to us about some of these things. Keep another close eye on that British pound that I posted a little bit earlier. If you like trading Forex, this is one that lines. I'm going to put this up again because this is another one that looks really interesting. And yes, we do know that Mr. Mario Draghi, formerly of Goldman Sachs, is going to be speaking tomorrow. And we're only 30 pips away from this 61% retracement in the British pound. So it's something that needs to be watched very, very closely. The problem is that we're having this really strong rally these last 2 days from the 129 level, and that wide bar that we're looking at here in this hourly chart gives us a little bit of caution. So we want to be careful up in there, but that 130.80 would be what you would be looking for. And on that one, I wouldn't risk more than 30 pips, which is roughly $200 in the gold in the British pound. So that's the other thing that's important. By the way, we've talked about Deutsche Bank here many times on the show, the fact that it's a very weak stock. It made new lows yesterday, and there's a little bit of a bounce, I think up about 10 cents or something. So we'll see whether that's going to be, if that's going to be interesting or not. But Deutsche Bank, the chart itself, looks very, very ominous. By the way, the CEO's name is Cryan. Can you believe that? 877-927-6648. Stay tuned for John Jameson of the Isle of Man.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member, FDIC.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I don't know whether we have John on the line or not. I think we're having some technical difficulties because the Isle of Man has just received electricity as of last month. Let me go on to a little bit of history, folks. This is an interesting day in history because in 1901, President William McKinley, whose picture is on the $500 bill, was fatally wounded by an assassin. And the problem was he died a few days later. He would not allow the doctors to operate on him because the fact that President Garfield, who had also been killed by an assassin, the doctors actually probed Garfield, and they were the ones that actually, actually killed him. So that was the bad part. The two historical things that were interesting about this, and we get this from my good friend Art Cashin from the NYSE, is that McKinley was at the Gold Expo there, or at the Expo, the Pan American Exposition in Buffalo, and he was waiting for someone very important, the son of Abraham Lincoln, Robert Todd Lincoln. I believe we have John on the line?
Yes, hi Larry, I'm here.
At the Isle of Man. How are you, my friend?
I'm very good, thank you. Yeah, good.
Listen, I gave you folks a little introduction of who you are, John. In fact, we've been friends for a long time, and you were the only person that ever solved the little puzzle that I had here, and I always remembered that, and we've kept in contact when you've moved around the globe. But one of the charts that you sent us, you're going to show us three charts here. We'll start out with that E-mini S&P. This is a very unusual chart, folks, that this old cowboy doesn't quite understand. John, you want to tell the folks what you're looking at here on this E-mini S&P?
Yeah, sure. This is just one of the ways that I organize my not my month, but my year. What I do is I want to ask the question, what happens if I bought the E-minis today and I sold it a month later on any day of the year? And what that does is that what you're looking at going up the side of the chart there are basically the trading days of the month, and on the front axis you're looking at the months of the year. So this data, there's lots of things you can do with this data. This is just all years between 2004 and 2016, but there are many different ways you can use the idea that I've just mentioned. So what it's telling you in green basically is when you're looking at in green, as you can see there, February and March this year, going up the side, you've got a pretty good bias to the upside. If you get an opportunity through other things that you look at, for example, your ABCD patterns, Larry, fit in fantastic with this, because if you get for example, an ABCD down into into what resistance or into support, and you buy, then the bias for the next month is good. And this is just one part of the of the game, as you know, but this is just a way that I look, and what it does is it shows me times of the year when I can expect certain markets to do things, and then using some inferential thinking and a bit of just looking at correlations, you can tell relatively well what's not in play and what's maybe potentially in play. So that's how I use it.
Is the E-mini in play right now, John?
No, I'm not. I don't. That's one of the hardest markets for me. I read a long time ago. I struggle with, I started off spread betting the Dow in the UK, and I've always struggled with that. But there are markets that, for me, just are much friendlier, much kinder, and that trend a lot better.
Mm-hmm. Is gold one of those?
Yes.
Okay, let's take a look at the gold market. And also, John, if you'll take a few moments to talk about some of the things you do with options, because when we were chatting the other day, it was really interesting what you did. So why don't we go through the gold chart here and take a look at it. And if you have a chance, tell us how you might want to play this with options.
Sure. Well, like any strategy, it depends on what you want to do. Again, with gold, this might look jumbled, but these are just flat screenshots. In actual fact, these models are all fully rotational, upside down, around. You can turn them out and look at them and really analyze them. And they're nowhere near as complicated as they look. So one of the things with gold is, I literally use this in a child simple fashion. So for example, you are looking at gold, and if I just get for this particular year, so you're going to ask yourself, is gold following this pattern this year? Is it doing that? So what you're looking at is strength at the end of the year and at the beginning of the year. Right at the end of March, what that chart is showing you is an opportunity to buy, and from there you're looking at if you look at that particular, it's quite difficult to see it, I'm afraid. I'm sorry about that, but What you're looking at, if you look at the gold chart, right at the back, if you follow your eye from the number 4 at the front for April and go right at the back, because of the skew of the chart, that's actually telling you that there's a buying opportunity in late March. Okay, so if you were able to rotate this, you'd be able to see it.
Now,
So
you use this in conjunction with ABCD patterns and some ratios and stuff also?
I do. That's exactly what I do. Yeah.
Okay, good.
And if you look at gold this year, the final thing with this, Larry, is that it's on track. So gold rallied 3 times this year. So by July, you know that it's already hit twice. It's already hit that expectation twice. So if you get an ABC down, which we did, then you can look to buy.
Well, is this chart showing that you have a sort of a negative bias towards the end of the year in gold?
Let me just get this through. Yes. So right now, basically, July and August gives you a bias to get long gold, and you can see a little spike. Well, it's not obvious on this chart, but there's a buying opportunity in October, and then statistically, then this, remember, is buying and holding for 22 trading days. So obviously we're just having a chat here, but I can obviously look at any amount of trading days. So you can say, what is the best trading? What is the optimum number of trading days? But the danger with that, Larry, is that you start over-optimizing things. So I just keep it stupid simple. What I'm trying to do is I'm trying to buy a market or sell a market, and I'm trying to hold it and get into profit so I can leave it alone and just manage it as quickly as possible. And that's the goal of using these charts. Did you want me to talk about options and potentially?
Oh yes. How would you? We had that great discussion yesterday about options. It just really, I really enjoyed it. Do you want to talk to us a little bit how you might use options with this?
Sure. Well, one of the problems with taking a big position in the futures is if you're going to expect to hold this for a longer period of time, is getting stopped out, because you'd just be insane if you just left a naked futures position on. And certainly with the things that I do, I have other interests, other business interests that are going on all the time, and I don't want to be sitting on a screen fretting about a position. So one of the things you can do is, in this example, you could buy puts. If you're looking at buying gold, you could buy puts expecting to lose money on the puts, and then you could buy the equivalent number of futures contracts. So how does that work? Am I okay talking about?
Yeah, we can. We've got to take a little break to pay a few bills, and then we'll come back and talk a little bit about this. And I want to ask you about these covered calls and stuff. So, John Jameson of Isle of Man will be right back. 877-927-6648.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back with John Jameson from the Isle of Man. John, someone's asking the question, what is your favorite market using this three-dimensional graphic approach? Do you have one that you like the best?
Yeah, the currencies. The euro
okay.
works good on the euro, works good on the British pound, and the yen, and any of the crosses too.
Okay. Now, I've posted your graph for the euro. Do you want to discuss that a little bit? And then also try to tell us how you handle the options, because that was very interesting, what you mentioned about, people worried about it getting stopped out. So why don't you continue on with the euro? Okay.
The euro itself, I'll just... What you're looking at with the euro, again, the same thing with gold, is you can see a very clear spike down, which looks like it's on this particular graph in May. It's actually in April. It's just unfortunately on this particular graph, the way that that's shown, it's a bit skewed off. But anyway, what that's telling you is it's not a great idea to be buying the euro in April, but it is a great idea to be buying it in May. And if you look at the price chart of the euro is following this seasonal pattern really well, and did follow it really well. And so it's given you multiple opportunities to get along that market this year. Mm-hmm. Multiple opportunities.
What's the outlook for the euro from this level?
Well, I do two things. Basically, once I'm in, I'm looking for a run of 30 to 60 days a year for a particular market. So right now, I'm just going to get a euro chart as we speak, right in front of me. So right now, I think 125 is on the cards, and we'll see what happens.
Okay. Now, John, one of the things that's your specialty that's always intrigued me is the way that you approach spread betting, because I remember you were spot on with Brexit with 9-to-1 odds, and that was a huge payoff. And then you also had the election in the United States pretty much tapped. How do you go about figuring these things? Just by contrary opinion, or what is it you're looking at when you're looking at some of these spread bets, and how often do you do them?
Okay. That is a good question. The thing with Brexit, I use something called Bayes' theorem, which you may or may not be familiar with. But basically, it allows you to have to form a statistical opinion without having masses and masses of data. So it works really, really well on one-time events. And such it was with Brexit. And I ended up getting 13-to-1 on Brexit, not 9-to-1. But anyway, that's another story. So this ties in well with, you were talking to me about options. There are many ways to take a position in options, but I find that the plain vanilla ways work best. So the choices you have are, for example, if you're looking to get long a market, you can get into a credit spread. So you can buy or sell a put credit spread. I'm not sure if your listeners are familiar with options, but what that allows you to do is have a fixed risk, okay? So what's good about that is that you have a known max loss at the beginning of the trade. And because you're selling, because a put vertical or selling one is a two-position option contract, what you're basically doing is if it's $10 wide, then you have $10 worth of risk. If it's $5 wide, you have $5 worth of risk. But some of the things you can do with it is that's a credit spread, so you're going to get paid immediately on doing that. Now, yes, you're going to have the obligation to cover if you get exercised, or if it goes in the money. But you can use the premium that you've been paid to buy out of the money options. So that's one way of playing it. Mm-hmm. Another way of playing it that is my preferred way is to simply buy the puts, expecting to lose money on the puts, so that your downside is covered, and then you go long the futures. So doing options on futures is slightly confusing, but it's the simple part of it is one futures contract equals one option contract. So the only part of it that's tricky is if you get exercised on the option leg. The good thing about currencies is a lot of the currencies use European-style option expiry, which means you don't have to worry about getting exercised before the contract goes off the board. Mm-hmm. So those are the main ways of doing it.
Okay. Now, the other thing that I wanted to ask about spread betting is it true that the spread betting is tax-free in the UK?
Yes, it is. Yeah, it is.
Wow.
One of the things that would make spread betting completely awesome is if they had offsetting accounts. So, for example, with my US broker, I can buy puts and I can go long the futures, and they know that my downside is hedged, so that means it cuts down on the margin positions, and it gives me fixed risk if I'm looking to take a longer term position. So it means that I don't have to go fiddling around looking at everything every 5 minutes. Sure, you have to manage it, but you have your downside hedged. You're expecting to lose money on the puts, you're going to write that off. And so you can get quite clever with it, because you can, for example, buy a short-term weekly put, which is quite cheap, and expect that to get written off. And what you're trying to do is get yourself into a manageable profit as quickly as possible. By manageable, I mean the daily swings aren't going to take you out, and you've got a bit of, the pressure's off. So with spread betting, yes, it's tax-free, but what they don't do is allow you to offset positions. So, if you could do that, it would be absolutely superb, but you can't.
Well, that's a very interesting thing. I wish they had that here, because that would really be a pretty good deal for most people, because the DAX and those things that they trade over there are all spread bets, aren't they?
Yeah, they are. Yeah. It's a big market here. It's a big market here. It is.
The reason they must do that is they figure so few people are actually making money. It really doesn't make any difference. Do you think that's the answer?
Yeah, I mean, I, as you know, live in Australia or for part of the time, and over there that is not the case. If you do anything in a systematic way, then they would say, okay, you're a professional trader, 50%, please. So, yeah. Well, obviously, but yeah, in the UK it's tax-free, and here on the Isle of Man it's like living in a giant ISA. So there's no capital gains tax here.
Wow.
Which is why I live here. So.
One of our listeners is asking us, what would be the best trade to look at for the next few days, say to look at for the next 2 months? Anything particular that has your eye, that you're watching really closely?
Yeah, I'm still looking at gold. Gold has been absolutely spot on. I own a position in gold, and I own physical gold, and so gold's been spot on this year, and I wasn't expecting that 1300 level to be taken out, but it was, and I'm expecting it to go quite a bit higher. So we'll see.
At least $40 to $50 higher, do you think, or is it even more than that?
Well, at least $40 to $50 higher, but if you look at your longer-term ABCDs, you're looking, I think, from memory, up to about 1450.
Yes, there's a huge ABCD there on the weekly chart, and we're starting to see silver tag along, because it's been, very, very lagging, but it's starting to pick up a little bit of steam here, which that's good. In the currencies, which of the currencies is the most most important. So 1450 would be your price that you're looking at in gold?
Yes, that on the ABCD longer-term forecast, for sure, absolutely.
Okay.
Yeah.
And how about the currencies? Which of the 6 major cross rates do you like the best?
Well, for the easy trade, there's still room to run in the dollar Canada. Mm-hmm. So there's still room to run on the downside. That's been a great trend trade this year, and there's still quite a bit of downside in that, and still tradable in the short term.
John, thanks for joining us. John Jameson from the Isle of Man. John, we'll have you on again soon, okay?
It's a pleasure, Larry. Thanks a lot.
Thank you, my friend. Stay safe.
Okay.
We'll be right back, folks. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi folks, this is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And, okay, alrighty, I'll do that. They're asking me to do a little technical work here. I'll be happy to do that. Now, I do want to end the show here. We want to keep our eye on the prize, folks. This is what we're looking at potentially here in the stock market, looking at the Bradley model. And as you know, the Bradley model is only right about 65-70% of the time. I think this has got a chance to be one of those times because it's certainly been following for the past since February It missed the big down move during June, July by a little bit, but this is pretty profound, especially since we have that Gartley pattern in the Dow Jones yesterday, and we were down 250 points in the Dow before it rallied back, which, believe me, folks, this market is amazing. The fact that you can have, nuclear warheads out there and they just shake it off. So it is a very, very powerful market, but the overall picture is still quite bearish, in my opinion. You can see that in several different ways, but of course the way that I think it depicts it the best is with this New York Stock Exchange Index. If we look at it, you'll notice that as of yesterday, we had completed a perfect Gartley pattern as of Friday, and of course we were closed on Monday. This is what we'll be watching here today. This is Wednesday, and we had a pretty good down move yesterday, but if we take out those highs of Friday, then this is probably going to go a lot higher. But right now, the odds, as they say, chance favors the prepared mind, and I think you need to be prepared to see this market has a potential, and as I've said many times, it's potential of going lower. We really need to get the S&P below that 2420 level. That's 40 handles from where it is, but that's where we are. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.